Hey everybody, what's up? Nothing to hide. Nothing to hide. Alright. Getting started today. Not the best day yet. Down $100. Great. Alright. What do I got? What's my positions here? Let's see. We've got 3 SPY puts. Strike price $393. Expiration February 10th. Same position I had on Friday. What am I hoping for here? Well, there we go. I mean, this is a 1-year chart. Let's turn it into the 1 day of SPY. That looks so crappy. Alright, look, this is a 3-year chart, SPY. This is the downtrend we're in right here. I mean, as lame as it is, I'm just sort of hoping this downtrend continues. Boy, that's a shit trade. There was more reasons behind it than that, though. I mean, should I get rid of this thing? Over here. This day on Friday. Yeah, this day over here, what was this? Friday, Thursday, Wednesday, Wednesday here. This big red candle, that looked like a top to me on Wednesday. That looked like a top. And in a bear market, I bought puts that day. Yeah, what was I gonna say? What's my risk reward here? All right, I bought the puts at 393. My upside out is 400. If we go above 400, I'll consider that a loss. I'll exit this position at 400. We're at 397 right now. And really, I'm looking for an, you know, I would exit a winning trade at 380. That's what I would be looking for. I would love for us to go down to 380 here. Seems real iffy right about now. Yeah, real iffy. It's tough. I don't know where the market's at right now. Maybe this is a stupid trade because of that. I mean, the one thing I think is that we're in a bear market. I mean, we've been going down for, what? I don't know, 4 or 5 months now? 6? Let's see. Oh, we've been going down for a year now. Jeez. Yeah, market's been heading lower for a year. I think we're still in that bear trend. I mean, the Fed is still tightening. That's all it comes down to. The Fed is tightening. If the Fed is tightening, the market will go down. I know. It's childlike logic, but that's what I think. That's what I think. But it's not happening yet. And we're going up today. Come on. Can we just top out? I know the algos want to... algos. You know what the algorithms do? The machines do? They, when retail traders are buying, they sell. When retail traders are selling, the algos buy. That's game theory in a nutshell. The algos do the opposite of what makes sense, basically. See what CNBC is doing. I've got a computer over here, guys. I watch CNBC on it. Who doesn't love CNBC? With Kramer and Faber and Carl. Terrible. CNBC is terrible. I mean, look who's talking, but down 231 now. Ouch. 237. All right. Is this gonna get ugly today? I'm gonna have to exit this position. Seriously? Seriously? What are the odds we go straight to 400 today? Pretty damn good, actually, when I think about it. And look at what's occurring right now. Pretty good. Down 270. I'm pissed about this one. I am. We seriously gonna go straight up today? What a joke. Why? Because the Fed is what? Strangling the economy a little bit slower. They're still strangling it. Yeah, the Fed is still tightening. So yeah, the Fed is still boy, I'm just aggravated. There's a lot of bullishness in this market all of a sudden because it looks like the Fed is slowing down. They're not tightening as much as people thought. The interest rate increases are going to be a little bit slower than people originally assumed. And it looks like we may be in for a soft landing, maybe, which means the Fed may be able to get inflation under control without a major recession, maybe. But the Fed is still tightening. That's it. They're still tightening. It may be a little slower, but they're still tightening, which means we're still in a bear market. It's that simple. I mean, it is that simple, isn't it? I mean, let's look at the chart here. Again, all of this right here, the entire first half of the chart, boom. This was a recession here. This was the COVID recession. But the Fed was pumping money into the economy this entire time. So even though we were having a recession and the economy was terrible, we went straight up. Now here, this is the Fed tightening. This is the Fed tightening. And they're still tightening. All that matters is the money supply and what the Fed is doing with it. And they're still clamping down. So let's not get too bullish yet. Although, I guess you can make an argument that what matters more? Is it that the Fed is expanding or constricting the money supply? Is the money supply the important question? Which I think it is. I mean, that's the main thing. Or is it the pace that the Fed is constricting or expanding? In other words, it's the question of speed versus acceleration. Speed would be whether the Fed is tightening or expanding the money supply, while acceleration would be the rate at which they're expanding or contracting the money supply. For instance, they've been raising interest rates by 3/4 of a point for the last few meetings. That's a very rapid expansion of their tightening efforts. Now they're going to be raising rates at only 1/4 of a point moving forward. That's a slower contraction. So the Fed is still contracting the money supply, but they're doing so at a slower rate. Can you make the argument that what matters is not whether they're expanding or contracting the money supply, but what matters is the rate at which they're doing so? I think that's that would be a, I mean, not that it doesn't make sense, but it doesn't seem right, doesn't seem intuitive. I mean, the main question should be, are they expanding or contracting? That's it. It shouldn't be, well, the market might go up because they're tightening slower than they used to be. Although, I will say there is a lot of that thinking going around right now. A lot of that thinking. A lot of thinking that, all right, well, the Fed is hawkish, but it's less hawkish than it used to be. It's not as hawkish. So the market should go up now, because even though they're still tightening, they're not tightening as much as they used to be. I don't think that makes sense. I just don't. I mean, granted, tightening slower is bullish than tightening very quickly, but it's still tightening. So we're still in a bear mode. And besides, Jerome Powell, at his last meeting, and many Fed speakers since that meeting have made clear that the question is no longer the rate of tightening which is occurring. It's no longer about the size of the interest rate increases at every Fed meeting. Now it's about how long they're going to sustain these higher interest rates. I mean, interest rates are at around 5% at this point. That is a restrictive interest rate. That is a money supply shrinking interest rate, we think. I mean, how long are we going to stay at 5%? That seems to be the question now. I mean, I will say over the last 2-3 weeks, there's been a shift in thinking. There has been. I mean, it used to be we didn't know how high interest rates would go. We're at like 4.75% right now. Nobody knew whether we were going to go to 5 and stop, or 6 and stop, or 7 and stop. We didn't know. Over the last 2 or 3 weeks, there's been some certainty that 5 to 5.5% is going to be the terminal rate. Interest rates are going to stop. They're going to stop raising rates soon. Not this meeting, but maybe the meeting after that. And the question will shift from how high are interest rates going to go to how long are we going to stay at these higher rates. So that is a shift. I mean, and that is a bullish shift. It is. I mean, when you go from thinking the Fed may raise rates to 7% to I know the Fed is going to stop at 5 to 5.5%, that's bullish. Yeah, it is. But again, I come back to the Fed is still in hawk mode. They still want to hold interest rates at 5 to 5.5%, which is restrictive on the economy. They're still pulling in the money supply, just not as fast as we thought they might be. So no matter what you're trading, no matter which stock you're in, you always have to be aware of where the broader market is headed. I mean, it doesn't matter if you're in Tesla or Apple or Amazon or penny stocks or, high flyers, whatever, industrials. All stocks will follow the broader market to a large, large degree. I mean, no matter what you're trading, you have to be aware of where SPY, QQQ, where the indexes are headed. Because unless there's major news or a major shift in a company's earnings or thinking, then it's going to follow the broader market and where the broader market is headed. Yeah. So yeah, I make a lot of trades on the broader market because in the end, unless you have major news or a major catalyst in an individual stock, the broader market is going to dictate where every other stock goes. So no matter what you're doing, you need to have a beat on where the market in general is headed. If you're going to do that, why not trade it? Really want this to top out here at 398. Come on, let's have this be the peak for today. That would be really nice for me. I would really like to see that. Write some of this down. I have to say, I like how I'm positioned here. I really do. I mean, it's not going well right now. Down 250 on the day. But I like how I'm positioned. Boy, this up move does not look real to me. That's like the kiss of death. Seriously. Thinking, oh yeah, this isn't real. I don't believe this move. That's like famous last words there. But I don't believe this up move. I think we're headed lower today. I do. I think we're going to top out right around here and head lower. Maybe not a lot lower. Not today. Maybe back to even or flattish, although we could head significantly lower. But I don't think we're going to head much higher today. That's what my gut says, that we've sort of topped out for the day here. Ugh. Like I said, famous last words there. Yeah, well, that's what I think. I think we've topped out for the day here. And get at least back to flat. And maybe it gets ugly tomorrow and we head significantly lower tomorrow. Although it could happen today. That would be my guess. Probably just wishful thinking, but what's actually going to happen is we end the day like 10 points higher. And yeah, that was probably what's going to happen. We just go straight line upward from here. Like my chart. This is what happens for the rest of today. Straight up. Nothing to hide. You know, like the dealers, Vegas. Got nothing to hide, nothing to hide. Nothing in the sleeves, nothing in the sleeves. CNBC talking about Elon Musk's Tesla tweet trial. Yeah. So 3-4 years ago, yeah, Elon Musk sent the Tesla buyout 420 funding secured tweet implying that Tesla was going to be bought out at $420 a share. Mind you, the stock was at like 320 when he sent that, implying that everyone who was holding that stock was going to get a $100 premium when the stock was bought out. Yeah. Let me just tell you, I lost thousands on that tweet. Thousands. Yeah. I was actively trading at the time, probably in Tesla. Tesla was a big name, always is. And when the founder of a company, I mean, basically the company, you know, if one man can be a company, Elon Musk was Tesla, is Tesla, and they send a text that says buy out at a specific price, $420, funding secured. I mean, that's basically saying, I have a buyer, it's done. So the stock was at 320. Of course, I bought it. You know, I didn't buy it in the first 10 minutes because, you know, the algos and Wall Street bought it quickly. So I had to buy it at, I don't know, maybe 360 because it was going straight up. So yeah, I bought a bunch of calls at 360, figuring, well, we should get at least close to 420. Funding is secured. Funding secured. And then over the course of the next hour or two, everybody started to realize that the tweet was complete bullshit. I mean, who even knows what the story was? I don't know what he's saying at his trial. Why he sent that tweet, what it meant, why you would say funding secured and imply that your company is being bought out if it just simply wasn't true. So I bought it, figuring there is no way a man as intelligent as Elon Musk, which since then I've come to realize he's not exactly the, you know, the sharpest knife in the drawer. He's really not. I'm sure he's got a lot of great qualities, but he's not brilliant, honestly. Yeah, how could a man this smart what I thought back then. Send a tweet saying that his company is going to be bought out at 420 if it's not going to be. Do you know what kind of problems that would cause? How much trouble it would cause? He might get arrested if he does that. So it has to be true. I hope they really nail him to the cross for that. I lost, like I said, I think over $5,000 on that tweet. I lost 8. Just be honest. Let's just say what it is. I lost 8,000 on that tweet. 420 funding secured. How do you say that? And now look what the tweet has got him. He's got to go on trial, and it's going to cost him. I hope it costs him millions. I hope it costs him $3 billion. Like he would even care. Seriously, I should be made whole. Maybe not whole, but give me half of that back. You know, $8K. What am I gonna get for it? You know, they're gonna have this trial. I'm sure he'll be found liable for something because you can't send a tweet saying, you know, your company's definitely going to be bought out for $420 when that's just not true, because it'll screw over a lot of people like me. Oh, pisses me off just thinking about it. But yeah, what am I going to get in the end? You know, one of those checks for like $75. That's seriously what's going to happen. He's going to be found guilty. He's going to get fined. Who knows? 50 million, 200 million, who the hell knows? And I will get a check for $34. At least I hope it's a pain in his ass. Yeah. I hate how CNBC like props these guys up. These big Wall Street guys. Notice that every like super rich capitalist CEO type on CNBC, they make him out to be some hero, some genius, some, yeah, they're never just some lucky asshole, which is what most of them are. Let's be serious. If you're some super rich CEO, I'm sure you're a hard worker, but you're also an asshole. One of the best ways to get ahead in the world is to be a complete selfish prick. So most of them are super hardworking, super selfish assholes. That's the best combination for becoming super rich on Wall Street. Be a completely selfish, borderline sociopath asshole, and be really hardworking. Do those two things. The more you have of both, the richer you'll be. But CNBC always makes these guys out to be heroes and great people. Oh, come on. And lucky. Lucky as hell. Because there's a lot of hardworking sociopaths out there. Look at George Santos. He's probably a hardworking, complete lying scumbag. But you gotta get lucky too. Yeah. So the luckiest, hardest working, biggest assholes are the ones that get ahead. But CNBC goes out there and tells you, oh, Elon Musk, he's so smart and so capable and he's turning the world around, and he's an asshole. He's doing good things. I'm sure he's doing... Tesla is a great thing for the environment. He's sending people into space and giving internet to Ukrainians. These are good things. They are. So on a macro level, Elon Musk is doing good. But he's also, I mean, come on, he's a jerk. It's not hard to figure out. He's not someone you would want to hang out with and have a beer with. No. Other than for the novelty of it. He's an asshole, and he's not that bright. If you see some of his tweets, he obviously has no idea what's going on in politics. I mean, he's got the political ideas of a 16-year-old, and he sends tweets like 420 funding secured. I mean, come on. These are not things that someone who's bright does. But you don't have to be bright to be a CEO. You gotta work hard and be a complete jerk. So, I like being a retail trader. Never fit in with that Wall Street culture. I couldn't do it personally. And I worked at like a prop shop on Wall Street for a year. It wasn't even like a serious Wall Street job. You know, I didn't go to Harvard, so I couldn't get like a serious Wall Street job, but I got a small shop job. And even that, oh God, the frat culture, and CNBC is just the epitome of all of it. Oh my God. It's such a country club. And I think all us retail traders, most of us will just never fit into that. We want to play the game. I mean, all of us want to play the game and be good at the game, which is trading. But we're also going against this machine that is Wall Street. And none of us want to be that Wall Street guy. Who the hell wants to be that Wall Street guy? That jerk who stomps on people? Ugh. And I don't know, that insecure sort of I'm better than everyone attitude. Oh God, it's gross. Anyway, yeah, it's much better to trade at home. Except we don't have any of the advantages Wall Street has, like MIT math graduates and giant supercomputers. Those are big disadvantages. Well, this day's getting uglier and uglier. Down 350. Am I going to be forced to say uncle on this trade? Probably am. Really like how I'm positioned in it. I do. But, alright, I bought into the position for close to 2,000, down to 1,200. If we get to 400 SPY, I'm going to have to exit. Yeah. Here's what I bought in for. Here's where it's at. Time is at 10:23. Algos are going to run this straight to 400. Are they going to keep going from there, though? Algos are going to take this to 400. So, I guess my real exit is going to be 401. because I don't want to sell at the top. I don't want to exit at the top. If 400 is going to be the top, I don't want to exit there. So market's going to have to prove to me that we're actually going above 400, which looks ready to do. God. Felt really like I was in a good position with this trade. You know what? Whatever. Can't win them all. Yep. Can't win them all. Yeah. One of the sad parts is, though, if we go above 400, I'll have no clue what this market is doing. I mean, I think we're in a bear market, but breaking above 400 here would really imply to me maybe we're not. That's why I like where I'm positioned right now. I really don't think breaking above 400 is reasonable here. But sure looks like it's going to happen. Yeah, I mean, let's see. Let's do a line. Trend line. Starting at the top. Hey, give me my trend line. Okay. Boop, boop, boop. Alright, that was the trend line before. This is a 3-year, 1-week chart. So the entire chart is 3 years. Each bar is 1 week. Yeah, you can see a month or two ago we broke above that trend line and then sunk below it. We might be at an inflection point where we start turning higher. I mean, I don't see that happening yet. I really don't. I just don't think we're at a point where it's. I just don't think we're at a point where it's time to get bullish yet. But maybe it is. Maybe it is. I mean, if we break above 400 here, that is a real bullish sign. I don't think we can hold above it, but even if we break it, I mean, fucking algos. They probably know dudes like me, retail traders like me, are looking at the 400 mark, waiting to see if it's broken. So they'll break it, force guys like me out of our bearish positions, and then start selling. Once they scare enough of us off. That's game theory. Look, they did it over here. They saw the top. The top was 410. They went right to it. Forced out a bunch of dudes like me. And then sold. Right down to 380. Wow. 10% drop. Boom. Right after they make sure they force dudes out. So 400 would be the force out point here. They'll take it to 400. That's almost guaranteed at this point. Down 400. Pain in the ass. Alright, anyway, this is gonna get boring now. Watch me lose to 400. I'm gonna try and come back on later and stream when this market decides what it's gonna do for the rest of the day. We'll see. Yeah. Alright, nothing to hide, nothing to hide. Good luck, everyone. Can't believe we're gonna go to 400, yeah. Down 420. 420! 420! Funding secured.